Hello, everyone, and welcome to another episode of What the Chart Says. Today, we'll be looking at a particular tool used by professional traders and investors before they open a medium term or long term trades or investments. Before they go into long term investments, we want to look at the tool. That's the sentiment. It's sentimental. There are various types, but we look at just a few today. Before we go further, let's see our disclaimer. Note that past performance does not guarantee future results, and if you are using this video, please note that it is not a investment advice. If you want to make any investment in the stock market or forex or in the financial market generally, please consult your financial advisor. We do not take any responsibility for any gain or loss that you incur. Thank you. Let's look at our agenda today. We'll be looking at the tool, then we go to the sectors. I have 9 stocks I want to share today. These are highly rated internationally. Before market opens, I intend to review all of them, but here I will just mention them, and then we'll go to the chart and look at the 30 capitalized stocks on the Nigerian Stock Exchange. All right, let's see the sentiment. That's the sentiment I'm talking about. These are the 3 I'll be looking at today. The first one is the advanced decline line. So this one, the yellow line, that's the advanced decline line, and this is the zero line. It is generally believed that when this advanced and decline line is above zero line, that's when the market is suitable for proper investment. Before I go further, let me mention quickly that this advanced decline line is just a short term, and it measures the market breadth. Also, we have the medium, short to medium, that's a Maclellan oscillator, and this is medium to long term, that's the Maclellan summation index. All right, so above here, that's the 30 capitalized stocks, NSE 30 for the Nigeria Stock Exchange. So you can see, let's look back to see what happened during the COVID-19. You see the market falling rapidly, and that is when you have the advanced decline below zero, so it's not generally safe, and mostly all of them are below zero. This dotted line is 0, and this one also 0 for the summation index. So the purple is the 10 EMA. When the 10 EMA is on top, it indicates that the market is declining. When it's below the black line, it indicates that the market is rising. Okay, so as you see, during the COVID-19, the market is falling, and almost all the indicators are below the zero line, but it's getting even lower. You see the oscillator, Maclellan oscillator, is rising. That's a divergence. It's showing divergence, but you see the long-term summation index, the longer term indicator is still going lower. That is when you should be thinking of going into the market. You say advancing, the oscillator is creating divergence while the summation index is falling. However, when the EMA is below now the summation index, you can see the market rising. This is when it's really safe to enter the market. That's the way I play it, but generally what some people prefer is when the summation index is above zero. That's when it's safe for them. But to me, I look at the oscillator above zero, and the summation index is better if it's below zero. Then it's rising. So that is when I prefer to go into the market. So what do we have now? You see the index is falling. All the indicators are below zero, as you see, except the summation index. However, the 10 EMA is above, so it's indicate that market is falling. Is falling. So what you want to see is something for the 10 EMA to be crossing and below, the summation index. That is what you'll be looking at. But for now, the sentiment, that's the market breadth, is very, very bad. It's looking very, very bad. It's looking very, very bad. We'll look at the data later and see possible area we should be expecting some action in the market. Let me, even from this line here, let me pick before we go there, let me pick a pen. Yeah, so there might be some reaction in the market at this point, we don't know, and some reaction at this level. So these are the level. Even from this point, you can see some levels I'll be looking at for. However, we'll look at the details later, but for now, the market breadth is showing that it's not good. It's very bad. Now let's go to the sectors. The sectors, sometimes you use the sectors as well for market breadth. I've used it several times, so I want to share that as well. Okay, so for now, what we have two sectors above zero. That these two sectors are strong. The first one here, let me get the pen again. The first one here, that is the industrial, and followed by insurance. This is the market, and below the market, that's the Austria index. Below the market, this is oil and gas. This is oil and gas. This is banking sector, and the last but not the least is the consumer goods. Consumer goods have been creating higher highs, but now it's falling. Okay, but what I want to show here, let's see what happened before. I would sometimes use this as for market breadth. Look at what happened during the COVID. Market is falling. This is the market here, and you see this particular sector. As the market is falling, look at this sector. That's the banking sector. Market is making lower low, but this sector is making, at this level, is making a higher low. It's making a higher low. While the market is making a lower low, it's making lower low, but this one is making a higher low. That is an indication that probability that the market will soon reverse is high. It's showing that market is likely to reverse very soon. So as soon as it crosses this resistance level, that is a good sign that the market is ripe. That is another way to look at market breadth, but that's from the indicator. So, but for now, what we have is the sector creating lower high and lower low. So this is not good. For insurance also, it's starting making some lower lows. So it's not looking good on the daily. This is the market. Market is generally going lower, and this is oil and gas. Oil and gas is making lower low, yet to break any resistance. Uh, Look at the banking sector. Oh, banking sector, that's the legend there. The banking is also making lower lows and lower highs, so not looking good. Except this particular guy here, that's the consumer goods. Consumer good, this the low here is here to break it, and is struggling to break this resistance. So it's coming down to the low. It's coming down to this low level. Okay, so we've looked at the tools generally. From the tool, okay, oops. From the tool is showing that the market breadth is still not good. So you can see one or two, you can get one or two stock rising, but the markets generally will affect it. When the whole market is falling, a single stock cannot rally efficiently. It will be affected by the others. So for now, it's advisable for investors who are planning long term to keep watching the market and not risking their resources. Uh, as I mentioned earlier, there are nine stocks investors are looking around the world on the Nigeria Stock Exchange as it's getting cheaper. These are the list. I got it from one website. So the first one they're looking at is Nestle, Dangote Cement, GTB, MTN Nigeria, up to Boa Cement. So I'll between now and before market open on Monday, I intend to analyze each and every one and post them here. Be on lookout for all this on this channel. Okay, let's see the chart quickly before I close this section. Yeah, this is the chart for the 30 capitalized stocks on the Nigeria Stock Exchange. That's what I used to generate the sentiment that we looked at, the market breadth. Market is still declining. It's making on the daily. Let's start from the monthly. Let's start from the monthly. From the monthly, this is the low from this chart so far at 925, and the recent low that was in April. So we have a bullish candle here. So for the long term, I think the market might want to test this level again. You might want to test this level, this candle at 988 for the long term. But let's see the medium. Medium is almost the same level, but something might happen here. Anything can happen above here. You might have some market reaction at this level. That's 1034. But on the daily, what's the daily saying? It's still getting lower. It's still getting lower, but we have there might be some reaction. Let me take a small horizontal line. There must be some reaction on the short term at this interval. There must be some market reaction here. So we just be on lookout for all of them. There will be some market action here, rejection, and what you can see. Let me draw if there is any market reaction, we get a rejection here, market can reverse back and test some resistance level. If this resistance level is not strong enough, market will rise above it, will rally above, then test it again. So if the market now found it to be strong, it might continue higher. But otherwise, what might happen is market reverse from here and start going lower. Okay, we continue to watch the market, but for now, the market sentiment is not good. The market breadth is bad. Everything about the market is not uh, very palatable. Let's see the Fibonacci level. At what level was that? That is this is 23. That's too shallow for me. 23.6 is too shallow, and this level is 38.2. 38.2 and 50. Anything between here, it looks the risk is a bit better. Okay, that's what I want to share today about market sentiment. I hope we learn one or two things regarding the market sentiment. If you have any question, please drop it below, and watch out for the 9 highly rated stocks that I think money might be flowing into them shortly. Thank you very much. Bye.